Welcome to my channel Pivot Points with RK. This is Ramesh Krishna. Today we will discuss about a very powerful option trading strategy called 5 EMA strategy. This 5 EMA can be directly applied on both call and put option charts like this. This is the 46,800 call option and this is 47,000 put option PE and CE charts. These 5 EMA can be directly applied on the charts, call option and put option chart, and this is Nifty Bank. Here I have just selected only 5 EMA, but let's not worry about this 5 EMA. Along with this 5 EMA, to get more confluencing trading opportunities, we can also apply an RSI. In the RSI, we can make a slight change. By default, it will be 70 and 30. So this I will change it to upper limit as 60 and the lower limit as 40. Same thing with this also. And the middle limit 50, I'll change the color into red. Some trading platform you may not get this 50 EMA, the 50 middle limit. In case if required, you can draw a middle line by selecting the 50 period, 50 average. You can draw a simple straight line here like this. So here my trading platform, which is Fires, is providing this upper limit and the lower limit along with this middle limit also. So I have selected 50 EMA. Same thing you can apply this. The strategy is very simple. Just you look at this chart. See, whenever you get a crossing over a closing candle above 5 EMA or near closing 5 EMA, and especially after a trend down on the option chart, if you look at this like something like this. See this 5 EMA chart, on this there was a continuous drop. The option price was coming down, and here somewhere it has given a spinning candle, indecision candle. So here we can wait and see after this 5 EMA, if we get a green candle which is closing near or above 5 EMA, and this is an opportunity to take a trade. And to get more confluence, we can also see the RSI from the oversold position, which is below 40. It is also taking a divergence here after a trend downwards from here. Look at this, from here this line is coming down here, and after this it's also getting reversal. So this is giving a more confluential trade opportunity. So you can even take a trade above this previous candle high, which is like this, above this 410, and keeping a stop loss below this, which is 380. 410 and 380 would be approximately 30 points. 410 and this 380, 30 points is your stop loss. And if the trade is taken above this candle, assuming at this candle 414, see the stop loss would be here. The target can be 1:1 or 1:15, 30 to 50 points. Look at this, 412 to my 50-point target would be 462. See here, target is achieved. The target is achieved here almost, and it has not hit the stop loss. So your entry is here. Our entry is here and the stop loss is here, and which is 30 points is the stop loss, and target can be at least minimum 1:1.5, which is 50 points. 410 into 50 points is 460. Almost our target is achieved here. It has not even hit the stop loss, even though there is a up and down, up and down. It was the target was achieved here. If you look at this, the point here is 50 points. 410 was my entry price. See about this, 410, and the target is achieved here. Same way you can see in put option also. See, whenever you see a downfall, see a downfall from this top level, it was a 5 EMA. The candle was closing below 5 EMA, below 5 EMA, something like this. And after some time, if you see, there was a divergence here. Even here in the RSI also, there was a divergence. It's been oversold here, the oscillator, and it started giving us reversal direction here. See, after this, when this top, sorry. See here, see here, after a downtrend, see after a downtrend, see here, we are getting a close above this 5 EMA, and here also the RSI is also giving a confidential signal. After this closing above this, if I had taken a trade at this 424, see my stop loss could be here, some 60 here. The stop loss is around 440 to 60 points, and that 426 to, and the target is also achieved very fast. So I hope you are able to understand this strategy. 5 EMA, a simple strategy, but look for a 5 EMA after a downfall, after a downtrend, both in the options, something like this. Let me draw this line. See, something like this. 5 EMA when drops down like this, and when it tries to take from trend reversal like this, whenever a candle close, whenever you get a candle close above 5 EMA, you can take a trade on this. Above this is your entry, and below this candle is your stop loss, and minimum 1:1 or 1:1.5 should be your target. But once you achieve 1:1, you can trail the stop loss, and sometime it can give you even 1:3 or 1:3, 1:4, even up to 1:5 also. But only thing that you will have to trail your stop loss, and in the trending days you can achieve these kind of a target. Same way it even put option also. See, after a downtrend here, and there is a trend reversal, and even in the RSI also you are seeing a divergence here. So when you get this confluence of two indicators, it gives a better result. So let's just try to understand what we discussed today is a 5 EMA trading strategy. It can be, the EMA can be directly applied on option charts, both on call option and put option. Whenever a candle, green candle, gives a close above 5 EMA, and corresponding to that, if there is any confluence in the RSI, which is rising from below 40 towards upper side, and that is the more confluencing trading opportunity. When we take such trading opportunity, the target can be easily achieved, and this strategy can work at least more than 60% of the time. That is, which is at least out of every 10 tradings, if you take, at least 6 of them will be very positive, and you might lose 4, sometime even you might get more than 6 7 trading opportunities, successful trading opportunities. But even if you achieve at least 6 to 7 times out of 10 times, you lose only 3 times, and 7 minus 3 will be at least 4 times. In case of 4 times, sometime you achieve a better risk reward ratio, which is more than 1 is to 1.5 or 1 is to 2, as in trending days this can be achieved. So end of the day, out of 10 trades, you will still be in profit mode. So you just work out on this, look out for on the backward charts, do some back testing, and then do some paper trading also. You see in the live market how it works with this strategy, and accordingly you can take trades. I hope you can understand this. You can apply and you can do some paper trading with this strategy. For EMA trading strategy, you can apply for EMA on both call option and put option charts, and whenever you get a close above 5 EMA, something like this, something like this, and below, when you see RSI is giving a divergence after a downtrend, and it's giving a divergence which is rising above this 40 down lower limit. Same way here also, it is rising the lower limit. You can take a trade on the high of this candle, keep your stop loss below of this candle, and expect at least minimum 1 is to 1 or 1 is to 1.5 or 1 is to 2, and start your trailing loss. Don't forget to trail your stop loss, because the moment it starts moving, it might even start coming backwards also. So in that case, we can always bring our stop loss to purchase cost, and in case if it reverses from there, because as the index options are always very volatile in the market, volatile in nature. So in case if it reverses, at least we can be saved from our stop losses. At least once it started moving upwards, we can square off at our cost price. In case if it starts moving in our direction, we can trail the stop loss to achieve a better result. Okay, so please back test with this strategy. In case if you are not able to understand, or if you need a better explanation, so leave your comments with this. I can always get back to you on this. I hope you could understand from this. So it's a very simple strategy. Try to implement it, work out, and try to do some paper testing. Okay, thank you. Bye.